Good morning. Good morning. It's Wednesday, December 11th, 2024. The Bank of Canada has just slashed our interest rate by 0.5%. So we've called our good friend Josh here, and he's going to maybe just join us, give us a little bit of an idea why this has happened and maybe something to look forward to here. Thanks for joining us, Josh.
Hey, no problem, Jay. Thanks for, I'm glad we do this every single week here. So today, the Bank of Canada did drop its interest rate. It's December 11th, 2024. And instead of coming in with a 0.25% interest rate drop, it's based on recent data that came in at 0.5% interest rate drop. Now, this doesn't impact fixed rate mortgages. We're unlikely to see those change, but anybody in a variable rate mortgage is going to notice a significant change in their rate. And anybody considering a variable rate mortgage, it's now going to look a lot more attractive. Variable rates are now going to be available at about 4.6%, which tracks very close to what the 5-year fixed rates are at most of our lenders. So if you are in a variable rate on a $400,000 mortgage with 25 years to go at prime minus 0.9, most variable rate holders are somewhere close to that. You are going to find that that monthly payment drops from $2,338 down to $2,225, more or less, depending on exactly what your remaining amortization is. So that's $113 a month in savings just from this rate drop alone. And this is a 0.5% drop. That now makes a total of 1.75% rate drops since June, and we are expecting some further rate drops after that. Now, if you're looking at a new mortgage, now might be the time to seriously consider that variable rate, because we already have fixed rates at the same as the variable rates, and the variable rates are still expected to go downward from here.
Whoa, so that's a little bit of relief here for our variable rate mortgage holders. So that's some great news. Hey, if you're liking this content, please subscribe. We do this every week, and we know you'll find it valuable. So, Josh, what can we expect, or why did this happen?
Well, how about we start with the why, right? There's leading up to this over the last 6 months, a lot has happened in the last 6 weeks since the last Bank of Canada rate announcement. There's a new president-elect in the United States. We've had various inflation reports come in and other things like that. A couple big ones that I think pushed it into the 0.5% rate cut are the unemployment rate is up to a now 3-year high of 6.8%. Aside from the big bump that lasted close to 2 years with the worst part of the COVID pandemic, early March 2020, all the way to the end of 2021, we did see higher unemployment rates, but now we're at 6.8%. And, if we look over the last decade, aside from a brief blip where it hit 7.2% in February of 2016, we're at the highest unemployment rate, ignoring the short COVID period of those 2 years. So that is concerning. Another thing is our productivity. We measure that in what's called GDP, or gross domestic product. It's not a perfect measure, but if you compare us to our neighbors to the south, the closest economy that we have, even if we compare Canada and the other G7 countries really to the individual states and look at the GDP per person measured in US dollars, Washington, D.C., not actually a state, but that's on the chart. New York and Massachusetts are the two richest states in the United States with over $100,000 each. And West Virginia and Mississippi are the two lowest producing states in the United States. And Canada is tucked right in between those two. So it's not really something to be super proud of. Canada's GDP per person is weak. It is, yes, ahead of the other G7 countries, except for the United States. But come on, we can be better than that, right? Let's be more productive here in Canada. At $55,000 per person GDP, there's definitely room for us to up that to at least maybe the US average, right? So that's another concern. And as we have lower immigration levels coming into Canada, which has been masking our GDP as a whole, and kind of hiding the fact that it's been going down on a per person level, I think we're going to see more emphasis on that. So you also mentioned what's next, right? Well, there's a few hints from the Bank of Canada in their announcement. They did point out that unemployment rate, just like I said, the amount of new jobs was nice and high, but we added a lot of people in the month as well. So with over 100,000 people being added, it definitely added to the unemployment rate. Reductions in target immigration levels over the coming years are going to show that GDP growth is going to be below the bank's original forecast. And that's government policy playing a role in what to expect. And then, of course, we have all heard about the outcome of the US election down south. President-elect Donald Trump is threatening tariffs on Canadian goods that are imported to the United States or exported from Canada to the United States of 25%. And we don't know what's actually going to happen. Is that a bully technique? Is that actually going to happen, or some variation on it? How is the U.S.-Mexico trade agreement, formerly NAFTA, going to impact that? We don't know, but that is certainly an uncertainty that's clouding the forecast. And so we don't really know. What we do know is we're likely to see more downward movement, but the Bank of Canada is going to take a look at every single rate announcement. They're 6 weeks apart generally. They're going to take a look at every single one and see what the data is telling it to do, and they're going to make those rate decisions one rate announcement at a time. The next one, probably a 0.25% rate drop on January 29th, 2025.
Fantastic. Thank you for that update here, Josh. So we'll keep our fingers crossed, see what happens next. But for now, I guess we'll see you next week.
Amazing. Thanks so much, Jay.